Welcome everyone to yet another one of these market open live videos that we do every now and then on this channel. I'm hoping to go through what's happening in the market. We're going to talk a lot about specific stocks. We're going to cover some of the news that are happening. We're going to actually go and dive into what's happening with some of my particularly favorite stocks when the market's open. But first, let's just go and cover some news that are happening over in the markets that might be interesting to follow through the day. So I'm going to just go and jump over here and show you a few things. So if you've been following, so this morning, one interesting mover has been Ford, and there's a lot of other stuff in here, but Ford were up as high as 3.5%, I think, early in trading. They were, I think, top of the pre-market screen for quite a while. And it was interesting because this morning they went and announced that they are expecting to beat their Q2 projections that they have set themselves, and they're expecting that the performance numbers are going to be really good. And so the market went and began flaring up very, very quickly. I was looking earlier and like it kind of jumped very suddenly after they made that announcement over here, and that was all very exciting. So you see we were at $15.50 at some point up here, but then it kind of like calmed down a little bit. And it's interesting because Ford themselves, I think I've got the chart somewhere, Ford themselves said that they expect their numbers in Q2 to be severely affected by the shortage of chips and a bunch of other issues, the production setup that they're experiencing difficulties with to do with the Mackie, etc., where they themselves, I think it was at the end of April, said that they're expecting the numbers for Q2 to be down by 50%. So we're seeing them to have expectations for Q2 to be higher than the 50% drop that they were saying before. They haven't really disclosed exactly how much higher, exactly how good they're going to be, because obviously we haven't even finished Q2 just yet, so they don't know that anyway. But it's quite interesting because their share price before this was, what was it, at the end of April. Let me just dump this over here so that you can go and see it. Their share price just before that over here was sitting at around the $12 mark. Then it dropped when they made that announcement they're going to not be able to produce the cars that they said they're going to be producing. And now we've had this meteoric rise with the F-150 Lightning. We've had like the Mach-E success stories, etc. Everyone's getting very excited, although the pickup truck is still a year away. They're saying late spring next year, maybe at the earliest. But anyway, people get very excited because they're one of the few very big car manufacturers that are actually planning to switch to electric sooner rather than later. Although even their own statements in their Q1 press release were saying that they're only expecting to produce 40%, I think it was, of electric vehicles out of their total production by 2030. And to me, that seems relatively slow. We're talking like a 10-year outlook where they're still going to be manufacturing the majority of their cars in the non-EV space. But anyway, I was looking at their reports, so they are doing reasonably well. Their performance in Q1 was really good, where they pocketed almost $3.3 billion worth over here in net income, which is noticeable because for several years before that, they were really floundering, that they were losing money in Q1 2020. So it's interesting to see how this goes and whether they can begin pulling stuff out. Maybe they're going to accelerate that timeline. We shall have to go and wait and see. Anyway, let's quickly jump to talk about, what's the time? I've still got 5 minutes. An interesting thing happened. So I was talking about Lucid recently because I personally see a huge amount of upside in the stock. By the way, this is just my personal opinion. Make sure you go and do your own homework and research before you invest in anything. Don't listen to chumps like me on the internet. But I was in a live video, I think just 2 days ago, where I was talking specifically about let me cut to me. So I was specifically talking about why I'm particularly excited about Lucid for the long term, but why I think that in the short term and short to medium term perhaps, the share price is probably not as exciting for me, because over the next year, I just don't see any real movers other than potentially the, CCIV ticker changing to LCID, and that's probably about as exciting as it's going to get. So we've already had all the downside and all the negativity around them declaring that they're going to be producing certain numbers of cars. They were saying they're going to produce 6,000 cars in 2021, starting with Q2, and obviously we're not having any cars being produced in Q2, and we might see, they're saying now, the 500 577 or however many it is produced this year, which are the pre-ordered ones, which again, the public won't really see. You can't go and buy one. I can't go and buy one. It's only the pre-orders, and the pre-orders were quite exclusive and very quickly sold out, presumably mostly to existing investors. So we're probably not going to be seeing much come out. They're saying now maybe Q1, Q2 next year when they're going to begin starting production, but they're very, very coy on that. He's had a couple of interviews that didn't go down too well because of that. And they had a target of 20,000 vehicles, Lucid, in 2022, which they aren't confirming or denying. I guess at this stage, they fundamentally don't know. They're still setting up that factory. And setting up that factory, I was talking about this 2 days ago, saying it is an incredibly difficult task to build a proper modern, like very unmanual, highly automated production facility for these much more complex than traditional vehicles factories. They've got theirs in Arizona. And I was kind of saying how I'm actually okay with a delay as an investor, because I would be very surprised if that didn't happen to a brand new company. I'll be surprised if they weren't going and having issues with setting up their factory. So we are seeing all of this kind of play out now. But and this is interesting. What was it? Yesterday, so somebody called Whole Mars Catalog posted something about Lucid over here. They said Lucid plans to produce, one sec, I'm going to jump it in here. Lucid plans to produce 577 vehicles this year, down from an earlier target of 20,000 a year by 2022. Not probably the best comparison because we're talking about a 2-year gap between those targets. But anyway, Rivian set for to produce, I guess, 40,000 units for the first year. Again, I'm not sure I believe those numbers anyway, but Ford is going to produce 50,000 Mach-E. So another load of question marks there. But anyway, add up all this together, and it's less than 10% of Tesla's 2021 installed capacity. So this is a push to say how great Tesla is at making EVs and how they're outperforming everybody else in the market. But here is the really interesting thing. There's a whole thread over here saying how amazing Tesla is, etc. They're building batteries in Berlin and Austin, etc. The 4680, all very exciting stuff. Oops. But then there was this tweet here. Elon Musk responded saying, manufacturing is so hard. I have the utmost respect for those who build things. And this to me is incredibly important and is a confirmation of kind of the stuff I've been saying. And I think that the stuff that some investors probably take maybe for granted. So when you're talking about a company that does software, or a company that provides a particular type of service which can be set up in a month or 2 months or maybe even 3 months, or even people who go and build something that is a digital form of tech, but you can, with a team of people go and build in a few months and it will work and function. Setting up a physical production facility for something with so many parts, so many suppliers, all the chains built, all of the thinking through of every little detail, the robots that do all the stuff and what happens in different cases, it is incredibly difficult. And so I think this could, this potentially, because this only happened 11 hours ago, I think after markets closed in the US, yes, definitely. So I think this could push CCIV shares up a little bit over the rest of this week, potentially, because he's almost like endorsing the fact that this is difficult and this stuff is not very easy to do. But, we shall have to wait and see. I'm not sure what's happening here. We're not got chat enabled. 1 second. How come we got? Can anyone type chat? Oh, I think I screwed something up on my setup. Apologies. I for some reason didn't set up chat, I think, in this. I don't know what's happening. Oh well. Anyway, let's keep on talking. I think I'll fix this for the next live video. I have no idea what happened. I normally have these live chat options enabled, and I haven't had a single one, so I'm presuming that there isn't anything happening, and I can't type it myself either. Whatever. All right, I can't enable it while it's live, unfortunately. So anyway, let's talk about the market and what's happening. Now that we're 1 minute in, let's go and jump into the live share prices. I apologize. I have no idea why the chat's not working. I thought that it should. Some people are messaging me on other things saying that I should have enabled it, but let me see if I can quickly figure it out over here. I don't think I can. I also have normal latency, which means you're seeing everything with a massive delay versus when I'm actually talking, which isn't helping very much. But anyway, let's go and jump right in and talk about some of the stocks. Let's quickly start with Tesla, which I think was the one that everyone's been waiting for, and we're seeing some green candlesticks going up, which is very exciting, very positive. I hold a disproportionate amount of my investments in Tesla, so I always get excited when we're opening up there. And let's see what is happening with the market overall, because that's something that is useful. What are we? We're slightly down, but trading relatively flat. That's what we've been seeing really over the last few weeks. I mean, if you ignore all the like one-off things, and if you ignore sort of Tesla jumping up by 5% and jumping down because of whatever Elon Musk tweeted and Bitcoin fluctuating, in terms of the stock market, we really have had a very, very flat few weeks. And if you're kind of looking at the stock market overall, it's been trading flat. I know it's gained like 1.1 or 1.2% over the last month or so, and that's kind of good, really, in the grand scheme of things. But we're not really seeing a bear market. We obviously had the tech sell-off, but we're not seeing that materialize into anything else. From there, we're not seeing any other industries really crashing, and tech has kind of been flat since then as well. So it's kind of interesting to see like where are we going to go from here. We're going to be just steadily growing overall as a market. Is tech going to begin actually catching up? Because we haven't seen the massive positive news emanating from tech that we have seen in the overall market. It's kind of staying flat while everything else is growing. So it's not dropping, but it's not growing at the same rate. What's happening with some of the other EVs while we're here? Just so we can see, Canoe is jumping up a lot. This is quite interesting. So some positive news probably emanating there. I haven't really looked into what's happening. I haven't looked this morning into what's happening with Canoe. Who else we got? What's CCIV doing? Where's CCIV? Let's have a look. The CCIV is jumping up and down, doing the. I'm guessing this jump up here was people getting a little bit overexcited, but potentially I see them jumping up and down. This is interesting because I recently started this fun activity. I have a little series of videos which I'm doing about once a month at the moment, where I set up a new portfolio on stake, which is only available in the UK and the US. By the way, if you're interested and you're based in the UK and the US, you can go and check out my link in the description below for a free share if you choose to sign up and deposit just $50. So I started this little thing over here where I went and bought a bunch of companies, and I'm trying to see if it's possible to go and beat the market, despite all data, all information, and everything telling you that it is not, and the fact that 95% plus of investors will fail to beat the market. But I thought it would be a fun topic just to prove the point by showing you how I fail. So far I'm doing all right. Actually, I had a return of about 10%, but then this week I deposited a load more money into this, so that's kind of dropped my average return number. So we'll have to go and do the maths as to what that actually means when we do the next update. But I disproportionately bought Tesla because it dropped below $600. I was kind of thinking that drop was relatively artificial, and I reckon like even at 630, 640, we're talking a 5% increase, and I think that might be coming sooner rather than later. Although there's a risk with Tesla at the moment where the returns that we're seeing, the share price is likely to probably fluctuate up and down, but probably not go up too much, because I think Q2 is going to be very challenging. I actually wouldn't be too surprised if in Q2, let's go and have a look at what Tesla is doing. If in Q2 their share price actually fell when they announced results, just because the expectations are reasonably high. The expectations are already set that, you know, the Shanghai factory is going to be producing stuff at a great rate, but we saw some leaks that in April their factory wasn't producing very much. We saw some information that there are issues with the government not wanting them to potentially like outmuscle some of the Chinese factories, the Chinese companies. We're also seeing that the Chinese government is trying to stop China being used as a sort of like facility for cheap labor and cheap manufacturing to export cars all over the world, which is why there was all this talk about, will Tesla go and begin opening a factory somewhere else in Asia, potentially in India, for example. And they're trying to stop China being a manufacturing hub for European cars. So Tesla pulled out of buying a big plot of land to expand the Chinese factory, which was going to be just across the road right next to their existing facility. And it's interesting because their April numbers were reportedly much lower than expected. I can't remember the exact number. It was like 23,000 vehicles manufactured over in the Shanghai plant, which was below expectations, certainly below where I think they hoped that number would be in order to hit their big ambitious targets. But having said that, even if the price drops for Q2, and I think probably Q3, we're not going to see necessarily any massive progress. If anything, Q3 might be negative because that's roughly when we were expecting, the Berlin or the Austin factories to actually sort of near completion and maybe begin production. But as it stands, that's probably unlikely. We're probably pushing towards late Q4 or probably even more likely Q1 if we're realistic for when production will, ramp up, maybe even start. So I think it's probably going to be sort of late this year, the end of this year, looking to Q1 when those begin actually producing cars, when the share price might begin actually driving upwards. So it's interesting with all of these different EVs, we're kind of seeing the same pattern where I think in the short term, in the next 3 to 6 months, I'm not expecting any real movements. If they happen, I think that would be probably down to just high volatility in natural trading patterns, people exiting other positions, moving into Tesla and other EVs. I'm not necessarily seeing like any great likelihood of this. I'm not seeing what the big drivers here would be, but I think in some of the other investments that I hold, there's probably more likelihood of interesting stuff happening. So for example, do I have Palantir here? Because there, I think we might see some really interesting movements. And look, Palantir is moving upwards today. For anyone watching over in the US, excuse the times. I live in the UK, so all of my times are 5 hours ahead of New York time, and that's why you're seeing that. But anyway, Palantir has been yo-yoing up and down quite a lot recently. There's a lot of good stuff about them. There's a lot of great stuff about their numbers, about the new contracts they're signing, about the potential, and about the growth of Foundry, which has been in the making for some time. But we're also seeing some negativity because obviously, like, people are concerned about how much of these profits are people pocketing with the preferential shares and the stock options that are being converted, and the volume of the stock options that are then being sold in order to pay taxes for Alex Karp and the rest of the exec team, or predominantly him. Plus, there's kind of this like negative vibe about Palantir when people are thinking about what is the firm doing with the US government? How are they helping them to do stuff that perhaps isn't the sort of thing that some people want them to be doing? And they work with agencies that are responsible for deporting illegal immigrants. They're responsible for military conflicts around the world. They provide the software that these guys use, and they build quite complex systems that are really quite good at doing those kind of things. And I get why people really dislike them for those reasons. I kind of get the emotional side of things, but I try to, although I'll take some stance, I won't invest in things that are really crossing lines and stuff here. I kind of see a data analytics company where they're selling their data analytics services to people who really want and need them, which, no surprise, is large manufacturing companies like, Boeing and Airbus, like big airline companies, like other big manufacturers that are now joining. There's a lot of conversations, I think, from the information that is coming out through various sources with auto manufacturers. But naturally enough, big government agencies that process huge amounts of data, or should process huge amounts of data, would naturally be the type of client that you'd think Palantir would, wants to have on their books. Because of the nature of the work that they're doing, it would be surprising if a company that was dealing with bringing together these data sets, huge data sets on people and very different transactions, on all this kind of stuff, it'd be very surprising if that service was not of interest to government bodies, various different entities, army, etc. So I kind of see it as sure, you can see the downsides potentially on the ethical side, but this is their line of business. So you either kind of say, well, we don't like the line of business, because if you look at other less popular at the moment or less known, potentially data mining and data processing companies, their services are used by a lot of organizations that people probably would have the same sort of ethical issues with as well. So I kind of don't really necessarily buy that argument personally, but hey, I don't know. It's a difficult one. It's a difficult one. For me, they're kind of I would say that although you may disagree with some of the policies, and the issue we have is that the policies we have now are supposedly from a different camp to the policies that we had last year. but people are unhappy with whichever side of the coin it is, because at least 50% of people don't like the other 50%, and people disagree with the policies, although largely they're kind of the same policies that are just shifting ever so slightly either side. But anyway, Palantir are doing what they're doing, and they seem to be doing very, very well. And it's interesting because only a few weeks ago, only 4 weeks ago, the price was, let's zoom out of here for a second. Only a few weeks ago, the price was over here at pushing $18, which is incredible because we're talking like this is 4 weeks ago. This is 12th of May. We're 17th of June now. And we're pushing the $25 mark over here. And I know that this is going to fluctuate, but I think that there is a lot more short-term optimism here because these guys are growing at a rate where every quarter they're posting results that are breaking expectations, which are already set high. But even without breaking expectations, as the results materialize and there's certainty that they can deliver, and as the growth rate continues, then suddenly we're looking, at 45-50% growth, which I think they might actually be this year because of the speed at which Foundry is growing and because of the growth in the client base, because the majority of their clients seem to be renewing and continuing relationships. I showed in another video before where in their Q4, I'm not going to pull it out because it'll take me some time, but in Q4 results for 2020, they had a small little thing on one of the pages where they said that what their pipeline figure total was, and it was something like $2.9 billion worth signed contracts. But if you look at the same number, which was actually in a different part of the report for Q1 2021, that number was higher. I think it was 5.4 billion or 5.6. It was almost double. And this is the exciting thing because their entire last financial year, last calendar year results, their entire revenue line was like 1.1 billion or whatever it was. So we're talking about a company that has, so this is largely, it has two sides to the business, right? It's consultancy and a tool provision company. And the two kind of work in slightly different ways, but ultimately there's a lot of similarities that you sign retainer contracts, if you like, or fixed deliverable contracts, and then you go and execute against them. And as somebody, so I've run a small consultancy. I've worked with lots of consultancies in the past. Signing contracts that go far into the future by a matter of years is incredibly difficult. Even for large consultancies, typically you're going to be running at much shorter timeframes. And these guys have, at the end of Q4, a volume of contracts signed which was more than double the level at which they were earning money at that point. And by the time it was the end of Q1, they had doubled that again. So we're talking about more than 5 times, or maybe roughly 5 times. I can't remember the exact numbers, but something like 5 times the volume signed. And the thing is, if you, I don't have the numbers in front of me, but then the number that stood out in that Q1 report was their average length of signed contract went up to 3.7 years, and it was 3.6 years in the quarter before. And this is really interesting because the volume, this is why it's really important, the amount of money that they have already agreed with potential clients went and increased by a factor of 2, but the length of time over which they expect to bill that hasn't. And that's why it's really important. That means that if say at the end of Q4 they're expecting say a 45% rate of return growth, because all of these signed contracts are going to be somewhat front weighted, right? So you typically don't sign a contract where you're going to start the work in 4 years or in 5 years time. You're going to start the work and then it'll finish at a point in time. So if you sign a piece of work and then it finishes in 7 years, then the average kind of point at which you're going to be pocketing that revenue is going to be 3.5 years. So we're talking extremely long-term contracts, which is amazing for a company that does this kind of work. It is almost unheard of to have these kind of metrics measured in, for the average contract of this nature to be lasting that long. Because at the moment, the majority of that is still going to be on the physical data analytics and the delivery side. So once Foundry really kicks in and the other projects they're working on, Gotham, etc., once all these things really kick in, that number is likely to increase, and that's probably why it increased from 3.6 to 3.7 years despite signing so many new contracts, because the provision of data and tech is going to be longer term. You're not going to go and sign up to use somebody's data, like the entire tool, and do all the integration and merge all your data into that tool and then a year later go and change that, because that doesn't make any sense. You're going to make a long-term commitment. People very infrequently go and change from one service provider to another. With those things, it only really makes sense to do it when there's a really big upside, when there's a really big reason for why you might want to go and do it. But in this case, well, we don't know. So it's likely that number is going to be growing, and if it goes over 4 years towards the 5-year mark, I think the share price here is going to begin exploding, because we're seeing something where the volume of the contracts is growing, the size of those contracts is growing, but the length of time is increasing. So that means there's more certainty. That means that next year and the year after and the year after that, they've already signed the contracts that already guarantee them a level of growth which would be insane for any other company. It's a bit like, so if you sign something which, if you have 5 times your annual revenue today, and the average period is 3.7 years, then that means if you look at those two numbers, that means that you're expecting per year to be earning, like 40%, I can't do the maths right now, 35%, whatever it is, more money per year on average over those years, just by fulfilling on those contracts. You almost have like 35% growth done, booked. And that's before selling any other contract. So 3 years from now, in 2024, you are going to be selling 35% more than you are today without having sold a single other contract before then. And that's where the power of that compounding can really begin kicking in for this kind of company. And that's what I get particularly excited with this business, especially it's a different kind of company. It's a different kind of business model. And some people, who invest in manufacturing more, or who invest in tech businesses more. I think here we have a slightly different business model, which is kind of like a downside for a lot of people, but for me is a massive, massive potential upside. Again, for anyone joining, I really apologize. I screwed something up when I was setting this live stream, and I managed to not turn on the live chat. I have no idea why that happened. I actually do know why it happened. I usually go and set these up, and I go and reuse the previous settings. But last time I did that, it didn't actually use the correct thumbnail, and some people complained and said, hey, markets are not crashing. Well, it's because the last time that thumbnail was used, well, for whatever reason, YouTube decided to go and reuse it. And last time that thumbnail was used, the markets were dropping quite significantly during the big tech sell-off, but it wasn't using the actual thumbnail that I created. And so I decided to go and start from scratch. And as a result, something went awry. And I went and did today's live stream, and here we go. We don't have live chat. I am going to improve for tomorrow. Apologies for that. Now, quickly, let's have a look at what's happening with Ford, because I think I haven't got Ford in my list. Let's add them because they were up so much in pre-market trading, but look, we're trading down. So they opened lower. So they opened sort of like trading at quite a wide range. These are big, wide, fat candlesticks. So for anyone who wasn't there at the beginning, Ford this morning announced that they're going to be expecting to beat their Q2 results, which is very exciting in one sense, but their own projections for their Q2 results were already slashed at the end of April, I think on the 29th of April, where they said that they're expecting manufacturing to be down 50% on their new line vehicles because of the chip shortage, issues with factories, issues with EV production. So a lot of investors got very excited the moment that news came out, and the price spiked and went up by about 3%. But now we're sort of like gradually trading down to where we closed off yesterday, because I think people are beginning to realize that actually an increase on an expectation that you slashed by a huge number just a few weeks back is actually not as exciting or as positive as it might seem. But that's just my personal take. That's my personal view. Let's go and look at some of the companies while we're on the chips, on the topic of chips, the electronic type of chips, not the other type of chips. Let's go and look at some of the companies that I am very excited and invested in here. So we're not doing too well with Micron. And Nvidia is climbing. Look at that. That is a big jump. Well, actually, no, it's not. The scale is off. Okay, we're only $10 up. No, $15 up. Whatever. It's not a huge deal. Sorry, I got very excited. So I saw something going up, which is unusual these days. This is not like 2020 when every day you open it up and everything is going up. ASML, another. They're doing very similar to stuff to what Micron is doing. What's AMD doing? Obviously, so these are not the same. So AMD and Nvidia are obviously a tier above some of these other guys because they produce the actual final product, whereas the other guys are the suppliers. But AMD, wow, now that is a big jump. we're talking a over $2 jump here. So that's big. AMD is doing really well. I've been saying for ages that I don't understand how AMD can be sitting at a price that is $80 since August. Really, like, I think you could buy AMD for $80 in August, maybe even July, but definitely in August 2020. Now let's have a look. why am I trying to recall this from memory when you can just go and have a look at this? We need to go further than that. Let's have a look. Even more than that. Okay. So we're talking, yeah, July last year, you could be buying at these sort of levels. So this is a long time ago, but the company's been doing exceptionally well. The stuff they launched in Q4 last year on products has done incredibly well. Their data side, the data server side is exploding. They are catching up to NVIDIA on the graphics side. They are continuing to dominate, probably pulling away from Intel on the processor side. They are partnering with, everyone. Like, they're partnering with Tesla to produce the chips that are now going into the new Tesla cars. I just never understood what people are like. These are all new things, material things that are going to significantly improve their output, but people are kind of concerned. So there's this whole like chip shortage thing, which I think a lot of people don't. I personally don't like the term, because I think people are thinking that there's some kind of natural restrictor, right? They're saying, oh, there's not enough raw materials, there's not enough factories producing the chips, there's not enough, like, the processes for 5mm and 3mm that people keep getting very excited by are too slow to be taken on board, and there's only so many of them, and there's only so many companies. By the way, TSMC, we got TMS or whatever. I'm in my ISA portfolio here. I probably don't have them in here anyway. Anyway, let's ignore that. But the issue is we don't actually have a chip shortage, and it's just a term that people are using, just throwing out there and kind of expecting it to be like, what we're really having is a demand surge. But that doesn't quite sound as exciting, and so the media haven't coined it. We're seeing a massive demand surge where, today you have every single car manufacturer there installing like literal processor level, like quite complex chips into their cars, where 2 years ago, like, hardly anyone, they installed chips, right, to run your screen, whatever, but these were super basic things. Now suddenly you have Teslas that play, the latest computer games. There's no real reason for that to actually exist. I personally don't think it's really necessary, but hey, I think that's more of a byproduct, because I think this new range of cars that Tesla is producing, they're showing off the games and the console-like stuff and all that kind of fun in games. But I think the real reason they're installing such complicated hardware into the cars is because now we get into the final stages of where they're actually expecting these cars to be in the generation that will probably be enabling full self-driving. And this is really important because, you can't see this notification behind my face, but gold is dropping. We're going to look at that in just a second. And that to me is really interesting, because Tesla is... Tesla has always said that full self-driving is coming. You could buy the full self-driving option for a long time now. You can go and pre-order, you can pay the $10,000, and there's other benefits. It used to be 6, etc., but there are lots of other benefits that it does. So to get the summon feature, you need the full self-driving option, and so there's a few benefits that people do get before full self-driving comes, but they never really tell you when it might come. So they're pocketing the money. But the problem is, for anyone buying their Teslas, a few years ago, the car's aging, you might upgrade, you might never see the value of that money ever as an owner of that car before you actually go and sell. And the thing is, they're now putting in such a higher level of spec piece of hardware into the new cars compared to the cars that they used to have, that I think we're getting into the situation where suddenly the cars that are being produced today can perform an order of magnitude higher number of operations per second than the older ones, and probably that is the sort of level that they're going to have when full self-driving comes through. So it was only at the end of Q4 last year that Tesla was releasing public statements saying that, actually, I think it was more recent than that even. So they said that it was more recent. I think it was Q1, roughly when Q1 was ending actually this year. And they were saying that they're going to stop all development of LiDAR-based technology and all of that, and they're going to make their full self-driving capability unlike most of the other car manufacturers and other providers of the hardware, which is interesting, but they're going to base it on visual only. So all they're going to do is they're going to have cameras that take pictures, and then that video that they're taking is essentially going to be processed by these dedicated chips to try to figure out what the 3D version of that looks like. So instead of doing radar or other forms of trying to understand what the surroundings are, they're going to basically operate it like humans do, which is interesting because it kind of probably works much better in an environment where the other participants on the road are humans, because you'll be basing your decisions as a computer on the same inputs and the same things that you are aware of as other participants on the road, which I kind of see like psychologically and mathematically is an interesting concept, because you're probably actually doing yourself a big positive. You're probably adding to the safety of the car, because you're not going to be doing, if the LiDAR goes and detects something which a regular person driving in front of you, behind you, to the side of you does not detect, and you make certain maneuvers or do stuff that a normal human would not, even if the human is paying attention and doing the right thing, you might kind of find yourself in a situation where you increase the risk because of that. Maybe that's part of the thinking. But anyway, they announced that, and that will require, a reasonably high amount of processing power, because they have all these different cameras. You have to go and process them in a live environment, try to figure out what that means for the 3D shapes and all the different objects that exist, and then make a determination of what your next action should be. Should you stop, accelerate, decelerate, move lanes, slow, like what the car should do. And that probably, because that only came relatively recently, and this whole partnership with AMD materialized at roughly the same time, according to reports, and now these are being fitted to this latest range of cars after a few months when they were rebuilding the factory. You can see the interior of the cars has changed quite considerably, even if the exterior hasn't so much. The screen is different, the software is different. So it may well be that this is now the generation that is actually going to be capable of running the full self-driving properly. Now, if they're going to be releasing that, they probably will have to enable it on older cars, but there's probably going to be massive restrictions around the capability because those cars are just not fitted with the right sort of hardware. But anyway, we shall wait and see. So AMD is finally doing... I'm just astonished that we're still seeing prices like this week dropping into the 70s, dropping below $80. I don't really understand that. What's Ford doing? Ford's just, as I expected, reversing back to normal. Palantir continuing their slow and steady climb upwards. It's all good. Churchill dancing. Tesla. Tesla is keeping their small jump upwards. So we're seeing like, close to 1 percentage point. It's good enough. We'll take it for now, but that doesn't mean anything in the world of Tesla, where you can go 5% up and down in a day because Elon tweets something. So we'll have to wait and see what happens with that. In other news, what's happening with AMC? Has there been any movement? Because people are sitting there. I've talked about this at quite great length. I don't know how many of you guys are particularly excited by what's happening with AMC. I'm interested in it from an academic perspective because, look, we're seeing some jump. Just as we switch to it, we're seeing an interesting jump over here happening. But I'm not going to repeat the same stuff I was saying before. I'm not anywhere near as bullish. Coming from a professional finance background and training background and stuff like that, I'm not quite as optimistic about the expectations that I think the people in Wall Street Bets have on this, and the way that they think it's going to unfold, and the way that those short positions are going to be unwound. I think there might be some disappointment down the line, because I think some of the expectations and some of the thoughts around how this is going to play out are a little bit oversimplified versus what actually is likely to happen, and how they can unwind these short positions through instruments or through cycling, the same way that they can go and build up very high short positions without actually physically borrowing that number of shares. But at the moment, there's still not much going on. We're still nowhere near those all-time highs of high 60s pushing the $70 boundary that we were seeing a little while ago. So probably another day when we're not going to be seeing any material movements, although there is something happening over here. But with AMC, we're used to seeing these ridiculous candles all the time anyway. Let's have a look at what's happening with some of the socials. Before we do, what's GameStop doing? GameStop is climbing slowly. Are we going to be seeing anything reaching up here? Is it the start? Is it the start of something? Who knows? It's just the same. It's kind of weird because we're talking about investments here, but we're really talking about completely different concepts, where we're talking about a short squeeze, which is not really investing in the same sense. But anyway, What's happening with social stocks? Not very much movement over here on Twitter. Not very much movement on Facebook. I saw it on another screen over here either. So not particularly interesting anywhere in those spaces. What's happening with Take Two? Because I have some interesting positions that I'm taking over here, trading downwards, continuing this trend that's been happening for some time. People are not very bullish because of some of the announcements of delays to releases of some of their big titles and the question marks around the profitability of those whenever they do come out because of the way platforms are shifting. Anyway, we're not going to talk about that. There's probably a whole video in its own on there. But let's have a look. What's happening with the S&P 500 overall? The market is 0.5% down. Sorry, 0.5%. 0.05% down. So not much movement. What I'm going to do is I'm going to leave it here today, guys. Thank you so much for joining. I apologize that I didn't enable the live chat. I will improve it later. Thank you so much to everyone who's joined. I really appreciate it. And I'm going to be making some really interesting videos for later today and tomorrow. So make sure you join them tomorrow. See you at the same time for the market open. Thank you very much. See you guys later.